morning, good afternoon, and good evening, folks. I hope all you guys are well. And if you can hear me and if you can also see my screen, please do give me a sound check and a screen check as well so that we can begin. So if you can hear okay, perfect. Thank you so much for the clarification for Andres, Kalim, and everyone else. Thank you so much. I wonder where is Amutha? Is Amutha not in today? Because Amutha is quite active. I think, yeah, Amutha is not participating today. I believe, yeah, Andres is there. Andres, how are you? Right, okay, great. I hope everyone is well. So a bit of an introduction about myself. My name is Naeem Aslam, Chief Market Analyst at AvaTrade. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst for AvaTrade. Now, today's topic is obviously one of the masterclass is focused on the US non-farm payroll. Earlier today, about half an hour or so, well, let's just say about 45 minutes ago, we had the US ADP number, why that number was so important and why the market is moving on the back of that. That is what we are also going to discuss in this particular webinar as well. And we're really kind of going to build the momentum from there to all the way to the US non-farm payroll data, because all of these things are quite important in relation to the US non-farm payroll number and how the market actually reacts on the back of that. So that is what we're kind of going to cover in our webinar. As always, first thing first, bit of a risk warnings and disclosures right in front of you. If you have any further questions, feel free to come back to us. The contact details are as follows. Twitter handle is AvaTrade. And for YouTube, that is AvaTrade as well. Highly recommend you guys to follow us on there. Now, the agenda for today is obviously the importance of the US non-farm payroll data, what makes the US NFP reading, what instruments to trade on the back of that, the current state of markets and analysis, defining levels and defining a strategy. So that is going to be the focus for us, what we would be discussing in terms of the markets. Now, can someone please tell me the answer for our first study question, why the US NFP data is so important? Can anyone participate the importance of this particular number? Because obviously this particular number will be released on Friday at 12:30 UK time, because remember our clocks went forward over the weekend, so usually it comes at 1:30, but this week we'll be getting this data as there you go, Amutha is here. Welcome back, Amutha. We were looking for you earlier. So Amutha is saying payroll data excluding farm workers. So basically what Amutha is trying to say is that the US non-farm payroll data is the most important set of economic readings that we can see. It influences everything and every single market across the world, and especially if the focus is over in America. So we're going to see massive momentum, massive uncertainty, massive volatility in terms of the dollar index, and on the back of that we also have the moves taking place in the equity market, commodity market, and of course the fixed income. But fixed income is not part of this particular subject, so we won't really cover that. But that is obviously the US non-farm payroll data. Powell has said very excellent, he's made a very excellent statement, because the US non-farm payroll data also tells us the state of the economy, how the health of the US economy is really. Is it improving? Are we seeing further improvements in that? Is the situation still deteriorating? Where are we heading in terms of the US economy? So that because the Federal Reserve, which is about to speak today, which is going to speak today at 6 p.m. UK time, may base its decision on the US non-farm payroll data, or let's just say the labor market economic conditions. So if this number comes strong, obviously what the Federal Reserve does is that it reduces the support in terms of the market, and what that does is that moves the dollar index higher. If everything is based on a good optimism, then the stock market also moves higher. But as for the gold prices will go to the downside. So that is your gold price, which is going to move higher, and that is your stock market that is moved to the upside. Now that is your dollar index that moves to the upside, and this is your Federal Reserve. And then over here, that is all about the US non-farm payroll data. So again, I'm going to write that down as a data over here. So if the data is good, that's what happens. And if the data is not good at all, you can see the reverse of everything. Under that circumstances, the Federal Reserve improves its support for the asset market. What happens for the dollar index is dollar index goes down. What happens to the stock market actually is that the stock market continues its run to the upside. But if the stock market sees that the Federal Reserve is not doing the right thing, it is taking the wrong price actions, then it moves to the downside. But as for the gold, everything stays the same, meaning it stays the opposite. The gold price moves to the upside. So these are just the common relationships that we kind of really have on the back of the US non-farm payroll data. Now, what makes the US NFP reading? Obviously, I'm going to take you to a site, to forex.com, or even on AvaTrade, or various different economic data numbers where you can check them on those websites. But today we had the ADP number. ADP number is very much focused on the private employment number. So these are the private employment numbers which came out today. The number came in at 571,000 against the expectation of nearly 400,000. So what that showed to us, this number confirmed us that the market is absolutely strong in terms of the employment market. Now remember, the Federal Reserve is going to pay attention to this number as well, which is part of this one, because if this ADP number over here comes in strong, the market expects the US NFP number to be strong as well. And if we do see a further strong reading of US NFP on Friday, then the market is really going to be expecting for the Fed over here to start tapering the process even more aggressively. But I think that is unlikely to happen. The Federal Reserve is going to remain more or less on the autopilot program. It will not take any aggressive measures in relation to that. Now, what instruments to trade? Now, that is a study question for you guys to really give me the answer for that. What do you think? What instruments can we trade? I've already given you the hints on the back of that. Yeah, absolutely. Amitha is saying that you can trade indices, so you can trade the stock indices like S&P 500 index, the Dow Jones, and of course the Nasdaq, even the European index like the DAX index, the FTSE index, and everything over here. And the implication of that you will also see in the Asian markets on the following day as well, because the market kind of digests that information as well. And the second thing where we can trade on the back of that one is obviously what? Forex. So anything which is trading against the dollar is very much going to move massively. So again, we will look at the pairs like euro dollar, sterling dollar, which are very much going to move on the back of this one. The third one is obviously commodities, and by that I mean gold prices are very, very intriguing on the back of that one, because the relationship over here is against the dollar, right? USD. So if the USD becomes strong, if this goes up, this must comes down, and then vice versa as well on that one. So that is the sort of a common relationship that we have among these ones. Now let's look at the markets. Give me 1 second. Now let me bring out the Forex factory for you guys so that we can see where the data is really going to be coming from, and then how to monitor that data at the same time as well. Now let's see. So you guys can see my screen again. Once again, I suppose that you guys can see my screen, right? Yes, I can see that you guys can see it. Thank you. Now on Friday, right over here at 12:30, this is the number that we are really talking about, US non-farm payroll employment number, unemployment rate, which is sitting at 4.7. Non-farm employment change is expected to be 455,000. Average hourly earnings, 0.4%. And then we have a Canadian numbers coming at the same time as well. But these are the numbers over here which matter the most. So remember to pay attention. Remember to be ready at 12:30 UK time on Friday, November the 5th, to keep focus on these particular numbers. If the number is stronger, like today, like what we have seen today, then we are expecting pretty decent moves in the markets. And of course, just while we are on the subject of this particular topic, tomorrow what we also have is the Bank of England's monetary policy decision due as well. So right here at 12 p.m. tomorrow, we have the Bank of England's monetary decision coming out. The expectations are the asset purchase program will remain the same. The votes are also likely to remain the same as well. And in terms of the interest rate, there's no change in terms of the interest rate is also expected on the back of this one as well, just to give you a bit of an information on the background of what could be happening tomorrow. But as of today, we had the ADP number, the private employment number came out over to here. Now, obviously, this number over here very much sets the tone for the US NFP number. This came in much stronger, 571 against 400,000, while the previous number was 523. So Arthur is saying, so if the data is good, means up for the currency, right? Therefore, buy. Yes, if the number is good, then we are expecting dollar to move higher, euro to move lower. So you will sell the euro, you will buy the dollar. So basically against a euro dollar, you will trigger the sell order. If the number is the opposite side, then you will trigger the buy order, again on the euro dollar or on the sterling dollar. So that kind of a relationship that you wanted to keep an eye on. Now, let's go back to our markets, right? So let me bring out the markets for you guys to see that what exactly we need to focus on. So let me restart the display for you guys. I suppose you guys can see my display once again. Right, okay. Now something just out of ordinary, Bitcoin. Dean, look, this is your question is being answered straight away. There you go. So the answer to Bitcoin obviously is going to be that Bitcoin is also be moving on the back of the employment data as well. So if the number is pretty strong, we may see just a small bit of a retracement, small bit of a momentum to the downside, but nothing major. But I think the overall momentum is very strong on the daily time frame. On the intraday time frame, the momentum is kind of easing off, which I really don't like it, because this over here is your 50-day, this is your 100-day, and then that's your 200-day. Now over here was the actual situation when the 50 dropped below the 100, that the momentum kind of started to fall. But now over here, when the crossover happened, the price moved above that. We are waiting for the 50 to change its direction, move above the 100-day simple moving average like this, and then when that will happen, that would be very positive. But overall, if we see it over here, the price is very much consolidating in around that 50,000 on the downside, and on the upside, we're looking at 64,000. So this is the range over here that we are very much focused on for the time being. So let's see where the market is going to be. But the US NFP isn't really going to bring any enormous sort of a price transaction and the back of the data. So it doesn't really have that stronger correlation on it. Yes, the dollar correlation would be there, but in terms of the markets, not really. Now, while I am on the subject of Bitcoin, I might as well just cover a little bit of Ethereum as well. Ethereum looks very, very strong. As you can see, the prices are going towards that 5,000 price level, which we have talked about in our analysis several times. On our daily analysis, we've talked about it. The RSI is still quite far from its overbought readings. I mean, 70 is overbought, but extreme overbought readings are still quite a long way to go. On the intraday time frame, on the 4-hour time frame, the price looks very, very nice and beautiful. Before it came to its 100-day simple moving average and bounced from that. Then recently we had the test of the 50-day simple moving average as well. Now the price is just kind of continuing its momentum. As long as this pattern remains in place, meaning 50 trades above the 100 trades above the 200, we are likely to see a bit more upside momentum in terms of a Bitcoin. All we'll be seeing is a channel sort of a momentum, prices moving in an upward channel, as you can see right over here. So that is pretty much the momentum is very much going. It is more and more challenging to the upside. There are less points on the downside that it is touching. The only downside points that we have seen on the downside we will be looking at is just over here. Only once it had the violation, but otherwise the price is staying above the lower line of this channel. So which kind of confirms to us that the markets are in a pretty good, decent shape. Now, as for the overall stock market, now I am very, very, very much hesitant to buy the market at the current levels. Why? Look at the distance of the equity market from its 50, 100, and 200 a simple moving average. It is clearly shouting that it is clearly telling us that the markets are way overbought right now, and the markets are likely to trend to the downside, meaning we could see a retracement coming very soon in the equity market. Now, that retracement can happen this week, it can happen next week, it can happen even tonight as well, what the Federal Reserve would say. So for us to really sort of looking for an opportunity to buy, we'll be looking at that 15,570 to 15,964, 15,694. This is the level that I wanted to buy. If I do wanted to buy, but at the current price level, I don't want to buy. I would probably be looking for an opportunity to short, and that opportunity to short would come wherever the price will make that like a candle like this, like it had yesterday. Obviously, yesterday was a pretty decent opportunity to short, but the prices from day before yesterday, but the prices kind of continued their momentum to the upside. So what you may want to do is just wait for the price to break below that 15,886 sort of a price level, or as the price forms a negative, a red candle over here, put the stop loss on the top of that candle and then short the market to the downside. If you don't want it to take that riskier bet, then wait for the prices to come back into decent zone of entry and then perhaps take that opportunity. Now, as for the S&P 500 index, what it is telling us that yes, the momentum is slowing down quite a lot because we had a down day here, we had a down day here, we are having another down there today as well. So this is indicating to us that the prices are likely to change their direction sooner than later. And that can really happen as of today as well. Does that kind of make sense to you guys? Any questions in relation to that so far, what we've discussed? Because it is quite important for me that you guys understand what exactly is going on. If you have any questions that of any topic that we have covered so far, this is the opportunity for you guys to just post that question in the chat, in the question box, and then I can answer those questions for you guys without any problem. So just let me know if you have any questions, and we can really do that for you. So Okay, can we look at the euro dollar? Arthur, we can certainly look at the euro dollar as well. Now, let me just finish this one, the S&P 500 index. Now, in terms of a buying opportunity, really the big buy opportunity for me in terms of that is going to be right over here. I would really like the prices to come near the 50-day simple moving average, and I'd like to get in at this particular stage than anything else. But for those investors who don't want to wait too much, then what they can do under the current circumstances really is they can wait for the prices to come in around this particular area where the 50-day simple moving average is sort of trading in around that. So that's support level number one. This is your support level number two. There is another support level in between that as well, which is right over here, looking at this particular area of consolidation, which happens to be falling in line with the 100-day simple moving average. But again, in terms of the market's price action, for traders who want to wait, you wanted to see over here. Arthur says cannot see the levels. Okay, let me change the color. I had a feeling that maybe this. Okay, can you see it now? Let me change the color of this one as well. Let's change that one to a dark green as well so you can see them. Are you saying screen is frozen? Oh, why is that? Sorry. Okay, there we go. Should be okay now. Thank you for being attentive and noticing that the screen was kind of frozen for you guys. So here are the levels for the S&P 500 index. So are you guys are long right now, or are you guys are short on the market when it comes to the overall market? Who is short? Okay, Amutha is short. That's good. Rizwana is long. That's okay as well, depending on the time frame. Zishan is short. Arthur is long. Kalim is long. So depending on the time frame, really, if you are on the looking at the short-term opportunity, I think right now buying it is just a little bit difficult. But if you have a long-term time frame, then you wanted to stay long because I think Santa Rally is coming and you are likely to get pushed out of a market if you are short. So short is going to trigger quite a lot of wrong trades, really, if I be honest with you. Now let me bring out the next one, and what we're going to do is a euro dollar, because people have been looking at the euro dollar, and then we will also do gold as well. Now euro dollar has been in a dominant downward trend against the dollar, right? So meaning the dollar is becoming stronger, the euro is becoming weaker, as you can see from here onwards. This was a sort of a support level that everyone was very much looking at, and that is still the support level that we need to see. Fairly recently, the euro did try to break above the 50-day simple moving average. It didn't really happen. In fact, what did happen was the price came into previous area of resistance, because the previous area of resistance would have been over here. The price came into this area, and then we saw the sell-off happening over here, and now we are coming into this area of support over here. So let's see if this particular range over here, sell over here, buy over here, kind of breaks out or not, or whether the price continues to trade. But overall, what we're really looking at in terms of the euro dollar is the downward trend, and the major or the important price level to really look at into go long in terms of that would be in around that price level 1.13. So this could be a really great area to buy, because recently the prices were oversold on the RSI when the price was over here. Now it has bounced back up, while the prices hasn't really made a lower low. So that is pretty bullish. So this means that this area over here, which is right now, so where the prices are trading now. This is an equally good area. Otherwise, we are focusing on this particular area. So these two areas of support. Now, quickly, I wanted to cover for gold prices as well. Gold prices have been struggling for the last number of days. They've been trying to move up, but they failed to clearly move up because this particular area was the area of consolidation. Now, gold today clearly broke below the 200, broke below the 100, broke below the 50-day simple moving average. Now, the question really is which way the price is really going to be going. So for me, when I look at gold prices, I believe that the path of this resistance really going to be right around over here. So I would say that this is the important area of support. So let this particular price move continue to come over here to fall, and let it come into this area of support. All right, guys, I am afraid that I would have to make this conversation a little bit shorter today because we have a TV interview right now, and I'll be heading over to CNBC Arabia discussing everything on that. So please feel free to join me there. Otherwise, I'll see you guys next time. Thank you.